Hello and welcome to Midas Markets Daily News. Let's kick off your trading day with the latest financial news and market headlines.
Good morning, traders. This is Jason with Monday Market Update. The US dollar index dropped from a 2-month high of 100.26 to 98.68, down 1.28%, as signs of a weakening labor market strengthen the case for multiple Fed rate cuts this year. Markets ramped up bets on lower borrowing costs after parts of the FOMC hinted at easing. Meanwhile, the administration has begun imposing tariffs on the EU, Japan, and South Korea, with Brazil, Switzerland, and India facing aggressive hikes next week. WTI crude slipped 2.7% to settle near $67 a barrel, but still finished the week up more than 3%. Reports suggest OPEC and its allies could soon agree to raise output by over 500,000 barrels a day, possibly as early as Sunday. Traders are also watching the threat of secondary sanctions on Russian oil buyers, which could put as much as 2.75 million barrels a day of exports at risk. Spot gold surged nearly 2%, climbing above $3,360 an ounce. A weaker than expected US jobs report confirmed softening labor market conditions and drove up expectations of a Fed rate cut in September. Payrolls rose by just 73,000 versus forecasts of 100,000, while prior months were sharply revised lower. As a result, markets now see a 75% chance of a rate cut. The dollar-yen pair tumbled more than 2%, sliding from around 150.91 to 147.28 and closing near 147.38. The move followed a weaker US jobs report that triggered a drop in treasury yields and spurred demand for the yen. The Bank of Japan held rates steady but raised its inflation outlook while warning about growing global trade uncertainty, keeping pressure on the yen. The euro rebounded sharply from a 7-week low of 1.1391, climbing to 1.1600 with a 1.49% daily gain. The weaker US jobs report boosted expectations of a Fed rate cut in September, with odds rising to 75% from 45% before the data. In contrast, the European Central Bank is seen staying cautious in the near term as Eurozone inflation held steady at 2%, slightly above expectations.
We hope you enjoyed today's market outlook. If you have any questions, feel free to leave a comment below. Remember to join us tomorrow morning for the freshest news.